FY23 for PVR was its best quarter, driven by very strong ticket sales, F&B spend on the back of superb performance and return to theatre. Similarly, Inox also delivered a strong set of results led by 83% revenue jump and a 36% EBITDA margin aided by cost optimization. The PVR-Inox merger is very much on track and awaits NCLT approval, which is expected to take another 6 to 7 months. PVR's box office revenue jumped 80% sequentially to 530 crores, of which 23% came from KGF 2 alone. Highest ever average ticket price and F&B spend per head of 134 rupees aided recovery despite slower ad revenue and led to an EBITDA margin of 34.6%, the highest since 2019. Box office revenue for Inox grew 75% sequentially, while F&B revenue shot up 89% on the back of ATP SPH jump of 5% and 12% respectively as occupancy rose to 29%. The cost control measures paid off and led to an EBITDA margin of 36%. So what has changed at the box office? Successive box office underperformance of Hindi movies led to speculations on the content and even consumer preferences. Since Bahubali, Indian cinema goers have been open to watching movies originating from Telugu, Tamil and Kannada film industry in the predominantly action drama genre. A large box office collection doesn't necessarily imply a complete shift in content demand. For example, this year 13 films did 100 crore plus business in India, slightly higher than 2019, where between Jan and August, 11 films did 100 crore plus box office collection. Also, of these 13 films, only 7 have performed between blockbuster and above average categories. 3 of these are in Hindi, 3 are multilingual and 1 from Hollywood. Additionally, 47 major Hindi films were released this year, which is in contrast to Telugu's 63, Tamil's 46 and Kannada's 20 plus. Beyond RRR, KGF 2, no other film managed to create a similar buzz in their core markets. Furthermore, some big budget star films also failed to do well at the box office. This, however, points out a trend that is previously Bollywood remakes of Tamil, Telugu, Kannada, Malayalam movies were well received and therefore became an easy choice for mainstream masala movies. Hence, the current popularity of a similar genre is understandable. PVR's turnaround this year has been spectacular and the recovery appears to be faster. However, Q2 is facing headwinds as none of the big budget star movies managed to do well at the box office. And therefore, that's likely to reflect in the financials next quarter. PVR has an aggressive target of adding 125 screens this year, funded internally, while Inox plans to add 77 new screens in FY23 and a total of 834 screens over the medium term. In our earlier reports, if you remember, we argued that while big budget movies necessitate box office releases, smaller budget movies will find space on OTT platforms. Now it appears that with the rising popularity of OTT apps, viewers prefer watching films on OTT unless it is an exceptional movie with highly positive reviews. Weak performance of Lal Singh Chaddha is no exception, but in line with the string of movies released in July-August that failed to impress the likes of Akshay Kumar's Raksha Bandhan, Ranbir Kapoor's Shamshera, John Abraham's Ek Villain returns. The current pipeline of movies for September-October looks promising and may even positively surprise at the box office. We continue to stay bullish on the movie exhibition sector and raise our FY24 revenue and EPS estimates for PVR by 5.8% and 9% respectively. PVR's share price has corrected 13% from the 52-week high this month and is now trading at around 1900 rupees levels, implying an FY24 EV to EBITDA of 8x, offering a good upside considering the robust sector environment and on-track merger with Inox. Of course, there will be some risks to watch out for. Number 1, delay or rejection of merger with Inox and weak box office performance of upcoming movies which may lead to short-term volatility.